And there it is. The markets are officially closed on this Wednesday, February 11th. Welcome, investors and traders, to the Midweek Live report. We have so much to cover, I don't even know where to begin, but I'd like to kick it off with Nod from our newsroom here. It's not official newsroom, but it's from the Nod Live feed, where Nod puts out the dynamic news that's breaking in the financial markets. Nod, what do you have to share with us today? Take it away.
Thank you so much, AJ. I'm doing my best. It's a pretty active time to be here, but thank you again, everybody, for taking time out of your day to be with us. Our team is so grateful for you. And listen, today we made up for our little government closure. So today was January Jobs Day, Wednesday, where we saw that the U.S. recorded its lowest jobs growth in 2025 for a non-recessionary year since 2003. Now, January's numbers rose 130,000, which was above the expectations of 66,000, which was the strongest in a year, and the unemployment rate dropped 0.1%, beating estimates. But, AJ, 1 million jobs vanished in a major revision, putting outgoing Fed chairman in a real pickle on what to do, as the labor market is strong, but we'll see what happens moving forward. But we had a lot of headlines flying around, and AJ, one thing I think that gets lost is debt. So I have a little bit of a chart showing here, AJ. What I want to show you is the U.S. is nearing $38 trillion in debt. And on top of that, households are at a record level. They're up to 18.8 trillion. So one would think that it would be good for the companies that hold that debt to be making money, for it to be a good thing. But as we know, that the consumer is getting tapped out. So those people are at risk. So AJ, with that in mind, with all this debt mounting, what would you say about AFRM and then JP Morgan, please?
Well, before we get into the two stocks here, I'll put these up. AFRM is the ticker symbol there. You have to understand the difference between a million, a billion, and a trillion. Right now, every 180 days, we're adding $1 trillion of debt just in the cost of financing the debt and interest payments. And so I saw a report that I thought was amusing, but at the same time was very sobering, where 1 million seconds will bring you back to January 28th. Imagine that. 1 billion seconds brings you back to 1994. And 1 trillion seconds brings you back to 30,000 BC. I mean, it just puts things in perspective. But now you put dollar signs on there. And I think we're at the point where our government officials have just basically surrendered to any idea that they're going to be able to fix this. So they're borrowing from future generations way out there into my great grandkids' lives that aren't even born yet. And so it's eventually going to implode. But I think what we're going to see before then is a massive earthquake. And I'm going to be talking about this more tomorrow on the Lindell TV network through The Absolute Truth, which is hosted by Emerald Robinson. And we're going to tackle what's going on here with Project Vault and the Block 50, as we're coining it here at StickyTrades, the Block 50 countries that are going to be participating in this trading block. At that time, I think we're going to see extreme volatility between now and July 4th. So put that on your calendar. And July 4th being the 250th anniversary of our country, I think Donald Trump and the administration is going to shake things up in the digital world with regard to digital currency and our debt. And I'm keeping my fingers crossed that they're going to announce some type of a lock or a tie to the precious metals as they back whatever stable coin they announce. And there's going to be a part two to the Project Vault. So stay tuned to that story. A lot of news stations are just not covering. The outlets just either oblivious to what's going on and the significance of Project Vault and what that means to us, the average everyday Americans, and the markets, and especially the currency markets. So going back to AFRM, you could see here today, we have a massive bearish engulfing candle. Now, I don't put as much weight into a bearish engulfing when it's at the end of a downward leg here. This is the downward leg where I'm drawing the arrow, the downward direction. It carries much more weight when you see a bearish engulfing candle showing up at the end of an upward leg. You know, let's say it showed up here, I would take that much more seriously. But the fact is that we're still heading lower in AFRM. And if I back out and look at a 10-year weekly, it doesn't look as bearish as you might think. But here's the danger zone for this stock. I'll try to draw the lines as straight as I can. I had just a little bit of coffee today, not too much, so that's okay. But here's the long-term trend line that would be matched in what would be known as a trading channel. See the trading channel? So we're at the bottom of the channel, right near this trend line. If we break out below that level, which is going to be right around the $50 level, then you'll most likely see price action dropping in a new low in more or less the width of the former channel. So in other words, I take the width, attach that to what could be the breakout point. Now you're talking AFRM possibly going down to the all-time lows for that particular company. So you got to watch that. Risk management should be your number one priority for trading. And we were looking at JP Morgan. Now, our VIPs, fortunately for them, they pay a lot more money than the average member, but they get extra trades. And this is one that they have. They have a calendar put spread on into that position, and they want JP Morgan to go right here. And you know what? That's exactly where it's heading. Look at that big, massive red candle right there. If you take a look down at the oscillators as I zoom in here, see that cross between the blue and the red? That's the stochastic. That's a sell signal. And the CCI down below, which is the commodity channel index, has already crossed with a bearish engulfing after yesterday. I'm sorry, it crossed with a sell signal with a bearish engulfing yesterday. See that? That's what I was talking about before. When you have bearish engulfing candles showing up at the upper end of an up leg here, along with bearish haramis, which are akin to or cousins of engulfing candles, there you go. They generally show up at the end of an upward leg. And what happens most of the time is you get sell-offs that occur. So we're already seeing the sell-off. And I still have a downside target on JP Morgan way down here, down at around 288. And so I think that will actually hit, not right away, but I think it will hit. Maybe it'll come up again for discussion in our rapid fire session from 6 to 7, where I'll put maybe a shorter term target on that. But it's not looking bullish for the financial sector or any company that's carrying debt or managing debt. And I think it's only going to get worse from there. Now, well, that sounds pretty dire, right? Wouldn't you say, for investors, especially? These are opportunities. Not you
For
know
sure.
very well. These are opportunities, especially for option traders who know how to spread trade. So, like the VIPs, they wanted to go down. Now we're not betting against America here by taking a short position. We're basically playing options where buying a put, you are protecting yourself, but selling a put, you're insuring the market. So they're playing both sides of that equation, and I think they're going to do very well as JP Morgan heads lower. If I could, I'd like to throw one other stock out there.
Yeah, please.
And you might even have this on your list. It's SCHW, which is Schwab. This has taken a huge hit over the last couple of days. Today, it's down almost 4% alone. Now, one of the reasons why the brokerage companies and more or less the financial companies are taking a hit is because there was news released today about AI cutting into the profits of those companies that offer financial advice and money management. So, we saw this coming. And Naj, you mentioned the jobs report.
Right.
As AI continues to creep into our economy, I think you're only going to see more people and their jobs being replaced by AI.
Mm-hmm.
And it could happen very quickly. I'm not going to go there on a limb to forecast what could happen in AI, but it could happen very, very quickly, and it would be represented in the numbers that we see, the jobs claims, and even the unemployment numbers as well. So,
AJ, you talked about JP Morgan and you used the word options. You personally switched from SLV to PSLV with regards to silver exposure. Can you just give a quick update on where you are with PSLV, what you're seeing, and any outlook you have?
Well, SLV, you could see it took a big hit. Now, I was already out of this when this all happened, but
Right.
I rolled into PSLV, which, in my opinion, is the closest you're going to get to a physical silver position while still owning the paper or the shares in the stock. And the reason for that is you have the shares of PSLV actually backed in silver that's guarded and held in vaults maintained by the Royal Canadian Mint. So every bit of the silver that's backing this ETF is documented, stamped, and made public in reports to the general public so they can see exactly how much is in the vaults. Now, I don't know what JP Morgan is doing with their silver as custodian for SLV. I don't know, and I don't care to know at this point. I simply have chosen not to believe anything JP Morgan says with regard to the positions and the silver holdings. Now, there is risk here, by the way, in holding PSLV because there's going to be continued manipulation in the futures market, which is all paper at this point. And I made mention to Nod before we started the program in the warm up here that there's going to be the Chinese New Year coming up. So the silver exchanges are going to shut down during that period. And I think it's 3 or 4 days. It might even be longer. I don't know for sure. You could check that up. But what's going to happen, I think, when Shanghai shuts down, I think the manipulators here in the West are going to try to have their way with silver to push it down as far as they can. Now, I'm not scared out of the market. I will not be scared out of the market. I think any dip or sell-off in silver, in my opinion, again, not advice, is going to be another buying opportunity for those willing to scale into longer-term positions because no matter what they do with the paper silver, you have to understand that they cannot change the crisis in supply. It's an absolute shortage, and they can't be adding physical silver by them pushing the price lower. It's only helping them to maintain a short position and get out of the mess that they're in. And I think that's going to implode eventually to where you're going to see COMEX, mark my words here on this February 11th, mark my words here. We'll timestamp this. I was a former member of COMEX for 10 years. I know exactly what's going on from the inside out. They do not have enough silver. It's February 27th. Let me put this on my chart here just for the record again. February 27th will be the report that comes out, a notification to COMEX on how many of those who are holding the futures position are going to want to take physical silver. If 60% of those people holding futures contracts say, COMEX, bring me the silver, show me the money, more or less, COMEX is now completely out of silver. Their vault will be emptied. And now they have March coming up, which is the next biggest expiration for the futures contract, and they won't have any silver to deliver there. So my forecast is very soon, in the next 2 or possibly 3 months, COMEX is going to make a big announcement. We don't have silver. You cannot settle in silver. Therefore, we're going to have to give you cash in lieu of the silver bars. And then what happens at that point? I know I'm going out on a limb once again, but I'm used to it. COMEX will then lose all credibility as a world leader in pricing the precious metal. And then the world is going to have to come up with a new pricing model because COMEX is absolutely corrupt at that point. They've mismanaged all the silver by rehypothecating or leasing it out, and they can't get it back. So they're beyond the point of no return. And again, that all translates to opportunity for those willing to pay attention and learn about what's happening in the markets, especially, and I get so excited, especially for the option traders. So if you're brand new to options, you know nothing about it, come on over. We have StickyTrades University. You can plug into online courses and learn all about that. I don't know if there's a scan code down there. Let me check. There's a scan code down there for creating a free account. That's a good start. Take your phone and just go right to the screen right there. Snap that scan code and come on over for 15 days and join us. We're having a great time here in the markets. Yeah. So that's my spin on PSLV. Yeah.
Thank you. You're doing all my work for me with the promotion. So AJ, you talked about a crisis in supply. I want to pull up a familiar picture here. This is you and Emra on Lindell TV for the second time, and you went over critical minerals. Today, the CME said that they're going to launch rare earth futures, and there are going to be some ETFs. So if we can dovetail back to USAR and FCX, knowing that there is very thin supply and extremely high demand, can you kind of recap that conversation and why this is something so near and dear to you as far as an opportunity?
Well, the exchanges at this point are reaching a level of desperation because they know that one of their main contracts is going to implode. So what they're doing is they're redirecting and even distracting, in my
Right.
opinion, they're distracting the general public to go, hey, look at this next new shiny thing. We saw it in Bitcoin, right? We saw Bitcoin come out. We saw Ethereum come out. We saw all the other cryptos. We had Fartcoin come out, right? I mean, what the heck are they doing? They're just trying to get people to put money in this casino. Now, with the rare earth ETF, you have to understand, because it's rare earth, they can't really back that with any physical metal or mineral. So it'll be more of a pricing model, I believe, that you're seeing in SLV, where it's not redeemable, but it'll be based on a value of maybe a basket of critical metals or minerals. So I'm not saying stay out of that. There's probably a lot of volatility and opportunity, but I'm not going to touch anything until I could at least get an eyeball on the option chain and how that's going. One other thing I want to mention, Nod, for PSLV, I mentioned this to our members last Friday because of the bearish Harami right there. I sold out of 5% of my PSLV, right? Don't get crazy. I'm not selling everything. I'm parlaying. And what I did is I took the money waiting for this gap down below to fill, which is almost $2 below the market. And while I'm waiting with 5% out of my PSLV, hopefully you're following me on this one, I took the entire amount of that 5% sale and I put it into LAC. This is another one that I talked about on Friday with Emerald Robinson. LAC is a lithium company. And I put it all into that because LAC is showing a beautiful level of support here with a buy signal on the stochastic. Now, I'm not, again, making any income claims. I'm just telling you that I think that LAC, because now the U.S. government has a 5% stake in this company, they're going to back this company and help them become profitable. I don't think it's out of the question to see this stock rally back up close to the all-time highs, which would give you 100% return on that share price. Now, one other thing, Nod, and why I like it at these levels is because once a stock breaks out over $5, you can see right now close to
the margin requirement, right?
The margin requirement changes,
Yeah.
and the brokers lessen the requirement, which means that people have more money to go buy that same stock with that cash, the added cash. So it becomes very bullish when it breaks out over $5. And the opposite would be true when it drops out below $5. It'll continue to go lower after the margin requirement is increased on the way down. There you go. So there's a lot of action here for sure. And
well, you mentioned margin, which leads me into the cryptocurrency area, where there's a tremendous amount of margin. But we have one of the best teams in the business. We have the Cryptex team. I've got just a quick picture of our team here, Matt and CJ. We do have a free trial. It's 15 days. It costs you nothing. I strongly encourage you to give those guys a try. They are the best in the business, and we're proud to call them teammates. But listen, AJ, over the last couple of weeks, there's been tremendous volatility in Bitcoin, and it is trading more and more like a tech stock again, really trading like a software stock because the software sector has gotten mauled. So if you wouldn't mind, would you please look at Microsoft, and then let's look at a cryptocurrency name tied to them, Hood, please. That's not one we've covered in a while.
Yeah, well, look at Bitcoin first. I mean, the first thing that comes to mind when I put up /BTC is Michael Saylor's face on an interview where he's just lying through his teeth. I mean, he had an interview I looked at on social media today where the host of the show, the interviewer, was asking, what are you going to do if Bitcoin drops to 8,000? He said, well, we'll just go refinance. Just casually, let's go. I don't think it's going to go 8,000, but even if it goes to zero, we're just going to refinance. And yeah, and then she asked, where are you going to get the money? What bank is going to loan you money? You think the banks are going to loan you money, Mr. Saylor? And yeah, sure. Oh, sure. Casually, yeah. Well, what else is he going to say? He can't say anything but that.
I tell you what, that made Michael Lewis pretty excited. He's ready to write his next book.
Oh yeah, and what is MSTR? What are they on, about 4 or 5% of the whole Bitcoin market right now?
Of all outstanding coins, it's crazy.
Well, I don't have the numbers, but you mentioned Hood, and Hood also has a big stake in Bitcoin,
right?
And they've been taking a beating here since October. I mean, they're down 50% from the October highs. Now, I wouldn't touch this one with a 10-foot pole right now. But all of the targets here, or I would say not all, but 80, maybe 90% of all my targets on Hood have hit. And so if you take a look at the monthly chart on this one, this was a bearish engulfing. Remember, I talked about that.
Yeah.
Look at that bearish engulfing on the monthly chart. And like I said, it dropped 50% from the high. Now, the monthly volume on this one, whoever's long on this one, you better be thinking about risk management. The monthly volume is going up, and we're not even halfway through the month right now. So we got the volume increasing on the way up on the monthly chart. That thing could drop another $20, maybe $30 from here. And I think I'm even being conservative with that forecast. Now, Microsoft, I'll go back to the daily chart. Microsoft took an absolute punishment of a beating today. And this is one of the big mega cap stocks, folks. Now, I had an upside target last Wednesday, very short term, came very close to hitting that at 429. But when I talk to our members, I say, look to the left as you draw to the right. What are we looking at on the left? We'll take a look at that gap. You see that? This gap, it took a while, but that gap is now officially filled. Okay. Now I think it's going to go back to test that support level down here, but my upside target is still very shallow. I don't think we're going to get much higher than my target before it starts doing a reversal. I know Microsoft is not a Bitcoin company. They have a lot more going on, obviously, but you got them involved in AI and everything else, being a mega cap stock. So I'll keep my upside target on that one right there on Microsoft up there at 429. And we'll have to see, what happens there. We had some forecasts last week, Nod. What were those?
Yes. So you dove into Bank of America, Google, and FIG, and those all looked pretty good. If you want to pull up a BAC, that was great.
Oh, there we go. Look at that. Perfect. Folks, how many of you raise your hand in the chat there? Just show like in a little emoji. Show some love there if you watched that show last week where I put the downside target on Bank of America 53.90. Look at that. It doesn't get more perfect than that, folks. Look, where are we closing? 53.85. We already blew through that, hit the moving average, starts to bounce up. But I think Bank of America is still a little bit more downside. In fact, I'll go out on a limb once again, back to back. I think we're going to break out of today's lows and start closing below that 20-period moving average. So my downside target for next week, we'll see how this works out, at 53.16. What was the other one you said that we had
Google,
a target on?
GOOG, and then FIG.
Oh, okay. Yeah, look at Google. Here we go. This was another hit. Folks, you loving this? Look at all the hearts going up. I love you guys. You're great. Now, that downside target on Google was 326. Now, you got to remember that high came out there at 350. We dropped to 326 and kept going. Now, look at the volume on the close, just very slightly higher. I think this one has a little bit more, very little bit more downside to test this low. So for next week, I'll see if we get a bounce there. I'll go to 308, round up a penny to make that a whole number there. So I'll go up to 308, and there you go for Google. I still call Google. Nod, you still call Google?
Yes, we're showing our age.
What a stupid idea calling it Alphabet Inc. when you got the brand Google. Everyone still calls it Google. All right. Anyway, FIG, was it? Is that right?
Yep. That was another great one.
Oh, look at that. We had an upside target hit yesterday. Oh, that's a beauty. So 23.86. You got to remember, last Wednesday was right here when we closed at, what did we close at? 22.51. So it was up more than 4% right there and hit the target yesterday. Now I could do a downside target on this. Why? Because this is known as a bearish harami. Remember, we talked about that earlier. Bearish haramis and bearish engulfings are related. So I'll go right. This is probably going to be stuck in a trading range here. It doesn't look like a big move, but I think that could drop another 4% to the downside here at 21.43. 21.43. Now we do 50 stocks like this in an hour on the rapid fire every Wednesday. So for those of you who scanned the scan code there to get the free membership, you might have enough time to get in there and listen to the show tonight. Otherwise, you can listen to the recording. If you don't get in tonight, you can listen to that recording. All right, we got a lot of tickers coming in.
Yeah, there's a bunch. So let's talk about. So Tom says, thoughts about SIVR as an alternative for PSLV. Is that one that you've traded before, AJ?
No, I have not. I'm not saying not to, but another reason I like the PSLV is because each share represents 0.34 ounces of silver. So when I'm trading this, I like to trade around 30,000 shares at a time because I know that represents about 10,000 ounces of silver. Okay, so that's why I like that one. This one, I don't know what the calculation is exactly, but if it's tracking PSLV and you could do things with that, I'd say go for it. The other thing you have to consider is that SIVR has options. PSLV does not.
Right.
And so that's why, unfortunately, the efficiency of the option market is not all that great. I mean, look at this. The slightly out of the money calls here on the 82 strike, you got a $2.40 bid ask spread. So, that's 30% of the bid price, maybe more. So you have to be careful. I would spread trade that. I wouldn't go directional on the options on that, but spread trades could work out very nicely if you know how to do that. So, yeah, that's why.
Thank you. All right, another regular TT Tafe is looking for us to look at SanDisk, please. SNDK. We get this one asked a lot.
I think we had a target on that one from last week, and did it hit? Oh, that's close. Oh, this was on our rapid fire. This was Wednesday, right? Then we had Thursday close on Friday, and then Monday, Tuesday, and today. So that downside target was 539. Oh, did it hit? I don't know. I didn't check this one. 539. Oh, look at that. It missed by $1.14. The low was 540.14. And then it bounced. That's not unusual, folks. So our members know that a lot of times after my targets hit, prices tend to reverse at that level. I can't say that we have a big enough following to be an influence on the price at that point, but I just find it very interesting. And I dropped that target because it was closer to the 20-period moving average. I think you got a little bit more upside on this one. I'll go out. We'll see if we could track this one. I know it's a big stretch there. I think SanDisk could get up to, I'll go to 645. So you got about $45 to the upside on this one. And then I think it'll most likely stay in a price range as the market tries to find a level of support that it's comfortable with. I don't know. I have to say, I'm not trading SanDisk, so I talk freely about that one. No problem. No disclaimers. Oh,
right,
2.5 minutes. Let's go. Let's get the
We
show
got it.
started.
So a repeat viewer, Market Uniqueness is saying, does Mattel look like a candidate for a dumpster dive? I know we don't like to do that, but
Mattel,
Mattel
I hate that one. I mean,
Mattel got slaughtered today.
All right. Well, listen, first of all, you don't want to try to catch a falling knife, right?
No.
Obviously, this is devastating news for Mattel. But the good news is for anyone that's looking, I would say there's a pretty strong support level down there around 14. But I would not touch that until, because it most likely will continue lower. And then you got to watch for the volume drop and then a possible pivot. At that point, I might question mark. I might entertain the idea of selling some cash secured puts or something like that. But no, I wouldn't touch that one. I wouldn't touch that one the way it is right now. It's bad news. Yeah.
All right, let's squeeze Kevin in before the bell. Kevin would like FRO, please.
FRO. Hey, Kevin, good to have you with us. That one looks good, actually. I think this one still has a little bit more upside. I'm not going to put the forecast on that to the upside, though, because you got everything overbought, and the stochastic is showing a sell signal. I think you got a little bit more room to the upside because of that increase in volume on the way up. But if I take a step back, look at the weekly chart, man, that is overbought. And look at this. I'll do the quick measurement, and then we'll go into the wrap-up. You see the divergence, the price divergence from that moving average? If I duplicate this and draw it and move it to the last time we had that kind of a divergence, look, we have a wider divergence now than we did back here in April. And what happened shortly thereafter? Bam, it got smacked. Dropped 50%. It dropped 50% from those April highs. Now, I'm not going to say it's going to drop 50% from these highs, but it could definitely pull back to a role reversal level right here, right around the 26.5 level, 26.28 to be exact. That's where you'd find support. So that's our analysis. We'll have to keep a better record next week, Nod, when we go and look at the results of what's happening here. So, folks, thank you so much for joining. Now, because this is a live broadcast, we ask you a favor. Go and share the link after we post it to YouTube. Please do that. You're helping us build the channel, and there's a lot more people that need to know how to manage risk and read the charts. And you're a very big part of our growth. And we cannot thank you enough, sincerely, from my heart. Thank you, thank you, thank you. So that is a wrap. Nod, thank you so much for your Nod Live feed. We're
Thank
going to
you.
call it quits for today, and we'll see our members at 6 o'clock. Take care. Go on.